That's right, Christoph. It's an intimate show here at Crypto's News. Welcome back, those few of you who are currently here live. We're actually running the show a little bit earlier than usual. I heard that it gets to be a little bit late in Europe when we run the show. I don't know. I start it whenever. It's pretty fun, but I've been doing it between 3 and 7 p.m. Pacific time, and today we're running it at 1 p.m., so it's a little bit earlier than usual. But welcome, everyone. Happy Monday as we get back into the swing of things here and get covered up with what's going on with crypto today and the events surrounding it. So I hope you enjoy the show. I hope you grab yourself a nice beverage or a drink if you're able to do so and you have some liberty, and just sit back while we go through some of the more prescient things that I think you need to be aware of if you're following cryptocurrency today. So yeah, I want to say firstly a big thank you to Ray Santos. Thank you, Ray. Ray was able to get us some new subscribers. He got us like 100 subscribers like this doing a Twitter promotion where he gave away some BNB. So if you want to be able to earn some future BNB or other tokens, make sure to follow Ray Santos Crypto, REY Santos Crypto on Twitter if you'd like to be part of those ruthless promotions, as he calls them. But yeah, thank you so much for doing that as we tried to get up to 1,000 subscribers. We went from like 750 to 850 thanks to Ray Santos. So huge help that way. But what we have with the prices today, we have the market cap dropping below $1 trillion. It had a nice few days, crypto. As you can see, Ethereum was up 6.1% over the last 7 days. Bitcoin was up 6.2%. Both have given some back as we start the week off. It's not just them. We had the Dow Jones down 0.4%. We had the NASDAQ down 1.6%. So kind of following the tech stocks yet again. We have cryptos on the way down. And this is moving into, I think, somewhat of an important week, because this week we're going to have the CPI prints coming out. So the consumer price index print coming out on Wednesday for the United States here, where there are a lot of eyes to see how inflation is doing right now based on the prior rate hikes that the Fed has had to do, and with eyes toward what the Federal Reserve will have to do with future rate hikes as we move to their next meeting towards the end of the month. So we're going to be getting earnings seasons here for stock and seeing if some consumers are finally feeling the pain, and that is leading to lower earnings for companies, and that could be just a sign of a recession finally beginning to really rear its ugly head here in the numbers. So that's what the week is about here on the overall macro. And there's some other weird stuff coming out, like the euro, the great flippening, euro dropping below a dollar, which not even hitting parity, but actually dropping even below that. Something we have not in my lifetime that I've seen. So very interesting change there. So for the most part, cryptos are flat yet again. We still have been holding up over the support levels here, and it's just been range bound for the most part, nothing crazy. And I think it is just following the macro trading, which is why I even mentioned macro in the first place. We have to really see whether there's going to be more beatdown. And I think the real pain could be from the wealth effect. If we do see that, for example, real estate continues to come down, we see stocks come down, then people feel like they have less money and therefore they get rid of the riskier things first. That could include cryptocurrencies they may be holding. And that could also apply to all sorts of institutions and funds who, if they're still around and they haven't been wrecked with all of this Three Arrows Capital nonsense that's been going on, then it poses credibility issues with crypto, right? Because they want to be able to earn for their customers, not lose in things that are not super insured and super protected. It's still early days in crypto. But let's go ahead and continue forward here. So we have this fun video. I wanted to start it off nice and light. I found this on Twitter and thought you might enjoy it. So how it feels to explain Bitcoin to friends and family.
Why don't you break this down simply for people like me that don't fully understand it?
Okay.
If you went out the yield curve on bonds, or if you went in.
Sure.
Is constantly growing. It's happening as all of these new companies,
So let's just start at the beginning, if you don't mind, explaining what is it?
Sure.
Why don't you?
You think who would have more of a canned response? I mean, besides just some sort of breath. But I've seen that breath even in real life. Michael Saylor trying to educate us all on Bitcoin. At least he's been holding steady. He hasn't panicked out yet. He has his company, MicroStrategy, has quite a lot of Bitcoin. So if they had to really get liquidated or panic out of this, I think that would be a real cause for concern at this point. Since the bull of bulls is still holding, I think we should all feel a little bit better at least. Celsius, oh man, back to Celsius drama. So Celsius had previously paid down a loan that they had with Maker. They had a huge position and they paid down that loan. It's a smart contract based system where you can withdraw a stable coin for depositing different assets that can be used for collateral. So you had a lot of wrapped Bitcoin that was deposited by Celsius, and that has been paid down, so they were able to take their Bitcoin back out. There were some concerns that that would cause the market to drop recently, but towards the end of last week, that did not happen as they finalized their Maker loan. In fact, the market went up. So not necessarily that they were selling or anything like that, but now we have to see what goes on with their other positions that they have in DeFi and decentralized finance, which includes one with Aave. So they have been paying down their Aave loan as well, and they've now withdrawn 6,083 wrapped Bitcoin from Aave. And so it's not just Aave, it's also Compound that they have to be paying down. And so it's kind of goes in line with this quote here from Andrew Keys, which I wanted to present to you. The fact that Celsius Network is paying back Aave, Compound Finance, and MakerDAO before humans should explain smart contracts to humanity. I think this is so powerful. Before even their depositors and other creditors are paid back, we're seeing Celsius being forced to, they can't really use their words or they can't use bankruptcy to avoid having to pay some sort of debt. They cannot use legal jargon to avoid paying some sort of debt. These things are enforced by the code, and they will be liquidated if they don't pay them back. And so it goes to show the power of smart contracts really here. Celsius has also hired a new set of restructuring lawyers to help them through this process as they try to figure out how to move forward here. They've been apparently averse to filing for bankruptcy, which I think could be a good thing. I think that's a good sign for depositors and retail, that they're trying to figure out other ways to do this, and they are seeking advisement from, for example, Citigroup and their prior firm. But now they've hired Kirkland and Ellis LLP to advise them on various options. This is the same firm that is also advising Voyager, among others, Voyager Digital. So maybe are seeing that they're doing a good job for Voyager. Maybe they could do better by following them. Voyager themselves, which we discussed in the last video, they had to cancel all sorts of withdrawals, deposits, their own debit card that they had, and they're another one that's been heavily impacted by all of what's going on. So they have given us an update now, and it does look like consumers who have USD deposits held on the Voyager platform are not going to be losing that. There was some conjecture going on around that, because as we looked at, there was a lot of talk about whether Federal Deposit Insurance Corporation or whatever, the FDIC insurance, could in fact make whole if USD funds that were deposited on Voyager were gone. But they are not gone. They're still parked at Manhattan Bank. Is it Metropolitan Commercial Bank in New York? So it looks like there is a special kind of bank account called a for benefit of customers bank account, and that is where the USD is held, in this Metropolitan Commercial Bank of New York, which I remember was the same bank that used to give Coinbase their debit card originally, their original debit card, the Shift card. It was Metropolitan Commercial Bank. So they do seem to be a bank that is quite friendly to crypto and has been for quite some time. So yeah, we got word that, yeah, if Voyager went down, that doesn't mean that customer funds were going to be covered under FDIC. But since those USD funds are parked at an account at Metropolitan Commercial Bank, those would be covered in the event of something. So it looks like one for one, what customers are seeing in USD balances on Voyager is what is held at this FBO account for these customers at the Metropolitan Bank. So they're just waiting for some sort of fraud and reconciliation process to go through to be able to grant access to that USD to people who might be due to it. So if you have USD that's parked on one of those accounts, you should rest easier if this blog post by Voyager is to be believed here. Hey, what's up, Renee? Nice to see you, and happy Monday to everyone I haven't had a chance to say hi to who's just joining us. Invitation to hit the likes. We only got 2 so far. Ouch. It would be nice to get at least a few more. So Three Arrows Capital's founders are hiding. So they're the ones that are really at the center of a lot of this. They were working with many of the platforms, and they owe billions, actually, it seems, to the different companies that are waiting for that, including Voyager, who they have said that they're waiting to see. They owe about $650 million in claims from Three Arrows Capital are owed to Voyager. So whatever Voyager, if it's not just USD that you have on Voyager, whatever you are due is going to be due to you in the form of, for example, shares in the company equity, existing pro rata share of existing Voyager tokens, so on. But this is in part due to how much they're able to get from Three Arrows Capital. Now, Three Arrows Capital has these 2 founders. You have Sun Tzu, and you have Kyle Livingston Davies, who are currently, it's unknown where the heck they are. They seemingly have disappeared, and there's even been visits to their office where they only find mail that hasn't been picked up. People are saying that their offices have been vacant since June. This is coming out in court documents that in the United States Bankruptcy Court, Southern District of New York, where it's just come out more details about exactly what's going on, because apparently Three Arrows Capital was cooperating with bankruptcy and going along with things, and then out of nowhere, it's really unsure if they're participating at all with bankruptcy claims, since when there have been Zoom calls in the past, the microphones for Kyle and Livingston Davies are completely off, the microphone and the video, so it just shows their name. They might not even be there, in fact, and their locations, again, completely unknown. Also, there seem to be concerns now in this document that the private keys and so on are still held by the founders of Three Arrows Capital, and they may try to move funds and liquidate them or transfer them somewhere else. So they're trying to get a stop to this. So the relief wants access to the Three Arrows Capital assets held within the United States ASAP, suspension of the right to transfer or dispose of assets outside of a court order, subpoenas for Suzu and Davies. You can see why they might be in hiding or running away, and waiving the relief period to auction the order. They want the documents requested wallets, bank accounts, cryptos. They want all of it, scared that they may soon not be accessible as the founders seem to be inaccessible themselves. So just an interesting change here of events. I thought that Three Arrows Capital was going along with everything and that some of these creditors would be getting at least some portion of what they would do, but were due. But it looks like these guys are trying to avoid prison to me. And it wouldn't be the first time you have crypto people going to prison. That's for sure. So Chinese citizens, I just wanted to remind people, I mean, it's really hard to feel safe with your assets. Really, the hardest money is Bitcoin. I mean, hard to print, but it's not just the only value in it. Some of the value in it is that it's still accessible to you in the event that you have a bank in Sri Lanka stopping all your transfers, or even in this bank, this just came out yesterday, a Chinese bank in Zhengzhou that also had customers' assets frozen. Custodians always have full control of the assets you give them. This one got a little bit more violent than what we saw in Sri Lanka. So I saw it a little bit more passive, but this one does not look to be the same way. So yeah, be very cautious where you're parking your money, and it always pays to have some cash, although again, cash is weird. It's a weird time for fiat. It's a weird time for everything. So I wanted to go into the history here. I thought this was a great thread by Miles Deutscher. So if you haven't been following the Mt. Gox drama, there are a lot of concerns about this black swan. I would say it's a gray swan, or is it, what is it called? A gray rhino, when you know something negative could be happening and you see it coming down the pipe, just like another future pandemic, right? Because we haven't really resolved much. So like, you know, something could be happening that we're not prepared for, that could be negative. But so it's not a complete surprise like with a black swan. But anyway, this goes into this possible black swan situation heading into August, when there's a suspected billions worth of Bitcoin that could be dumped into the market. Bitcoin Cash, maybe even, I mean, that we'll see how it affects the market. But this goes into the history of Mt. Gox and leads us up into this most relevant period today. So let's check it out. $137,000, $3 billion worth of Bitcoin could be dumped onto the market 8 years after Mt. Gox hack. Some are labeling this as the biggest black swan in Bitcoin history. I somewhat doubt it. There's just, it's like what people fear the most never happens. Like with Tether, that's been the biggest fear. Not that it won't happen, but when everyone is scared of something, it just tends to not be that bad from what I've noticed, but whatever. What you need to know about Mt. Gox, a fascinating story of hacks, lies, and deceit. Firstly, some history. Mt. Gox was originally founded in 2006 by Jed McCaleb as an exchange to trade Magic the Gathering online cards, hence the acronym MTGOX, Magic the Gathering Online Exchange. The site only operated for a few months before Jed moved on to other ventures. Years later, in 2010, Jed started to develop an interest in Bitcoin. He spotted a gap in the market, because there was a lot of trading. A lot of this trading that went on was using Bitcoin for these Magic the Gathering cards early on. So years later in 2010, after he developed an interest in Bitcoin, he spotted a gap in the market as there wasn't an easy way for users to exchange Bitcoin at the time. He still, like for example, people had to physically mail money to someone and then wait for the Bitcoin to be deposited in an account. That was one of the ways Bitcoin was bought in the early days. I know, hard to believe, but it was how it was. He still had the mountgox.com domain lying around and used it to officially launch a Bitcoin exchange. After 10 months, Jed sold the exchange to Mark Karpelès, Magical Tux on Twitter, at a valuation of 6 months' revenue. After just a few months with Mark at the helm, Mt. Gox doubled its trading volume to 20,000 transactions a day, even in its humbling beginnings. At the time, Bitcoin was trading around $1. But it wasn't all smooth sailing. According to Bishir Taba, in June 2011, Mt. Gox reported that 25,000 Bitcoin were robbed via a compromised computer. $400,000 at the time. Today, these Bitcoins would be worth a staggering $525 million. The attacker then used artificial trading activity to cause the price to temporarily plummet from $17 to 1 cent, scooping up an additional 2,000 Bitcoin in the process using stolen customer wallets. I mean, this is really early days here. We're talking about Wild Wests. In the years following, Mt. Gox had a series of controversies. Accidental transaction log fork in March 2013, causing a 23% crash. Suspended trading in April, causing a 50% crash. $75 million lawsuit and a U.S. Department of Homeland Security warrant in May. Suspended withdrawals on June 20th. But despite these issues, trading volume on Mt. Gox continued to explode. It was by far the biggest crypto exchange, handling 70% of all Bitcoin at the time, trades at the time. In December 2013, all appeared to be gold in Mt. Gox. Revenue was at an all-time high, and Bitcoin had recently breached 1K for the first time, but then the unthinkable happened. By February 2014, customer complaints were mounting as people were experiencing huge delays when withdrawing Bitcoin. On the 7th, Mt. Gox officially suspended withdrawals, citing they needed a clear technical view of the currency processes. On the 10th, they admitted to finding a bug in the Bitcoin software leading to altered transaction details. This effectively meant Bitcoin could be resent as transactions were labeled as invalid. This type of exploit is due to an issue called transaction malleability that's been discussed years since. For the next 2 weeks, angry customers were left in the dark, unable to withdraw their Bitcoin. On the 17th, the CEO, Mark, held the narrative that Mt. Gox should be able to resume withdrawals soon, and that they were committed to solving this issue. However, just 3 days later, Mark resigned from the board of the Bitcoin Foundation, BTC Foundation, shortly followed by Mt. Gox removing all of their Twitter posts. Subsequently, the websites went offline. So kind of reminds me of the Three Arrows Capital founders right now. They're just gone. However, So on February 24th, a crisis management document was leaked revealing that Mt. Gox was insolvent after losing an estimated 850,000 Bitcoin. Today, it's worth $18 billion. It's about 4% of the Bitcoin supply. 4 days later, Mt. Gox officially filed for bankruptcy. They finally admitted to losing 750,000 of their customers' Bitcoin, including 100,000 of their own. Remember the 2011 hack I mentioned earlier, says Miles? Well, it turned out that the Mt. Gox private key was unencrypted and stolen back in 2011. We don't know how the hackers obtained this key. There's speculation an insider might have assisted in this. Here's where things get really interesting. Mt. Gox released a statement on their website on March 20th, 2014, stating that they had found, I remember this, 200,000 of the 850,000 missing Bitcoin. In 2015, Nobuaki Kobayashi was appointed as the rehabilitation trustee by the Tokyo District Court in charge of, getting the Bitcoin and the funds back to people who were due. His role is to oversee the reconciliation of creditors. Meanwhile, CEO Mark Karpelès was arrested for fraud and embezzlement in August 2015. It was found that he manipulated Mt. Gox computers to display incorrect balances and stealing $2.6 million worth of users' funds for personal uses. And he is currently serving 30 months in prison. For many years, the Mt. Gox situation stagnated as a result of lengthy legal proceedings and investigations. But in 2021, Mt. Gox and the Tokyo District Court formalized an official rehabilitation plan. This plan outlines the intent to pay creditors. Oh yeah, Kiwi is awfully quiet. Who was it that said that? State N. He was, I thought, a little bit sick today, so I had to bring him on the show to see if he would feel a little bit better and be comforted. But I woke up and he was awfully quiet and still. I thought maybe he was getting sick, but he seems somewhat fine, just a little bit too calm. It's suspicious today. I agree. Hi, beautiful bird. But in great news, actually, my partner Elle has come back. So we've been I haven't seen Elle in 3 or 4 months. We had a breakup and we have reconciled and gotten back together. This is a beautiful thing, having her back in the house, and I'm super happy about that. So warm welcome to Ellie back on the show. For those of you who remember her, we will continue with the news now. This brings us to the present day. On July 6th, creditors received an email regarding payments. So I was missing, I wasn't uploading videos, and I wasn't following as closely everything that was happening back around July. Still, was it? Yeah, we were just beginning the show recently. So I was unaware of this, but creditors received an email regarding payments. The Mt. Gox stated that the rehabilitation trustee is currently preparing to make repayments. The rehabilitation trustee is responsible for issuing payments to the creditors, in this case, Nobuaki Kobayashi, who's overseeing the rehabilitation process yet again. As per the balance sheet, they currently hold 137,000 Bitcoin. Remember, they had found 200,000. Bitcoin. That's valued at about $3 billion at current prices. Creditors have the option of receiving USD, so dollars, Bitcoin, or Bitcoin Cash, since we know that Bitcoin Cash was born out of Bitcoin during the great fork of 2017. It's estimated that the creditors will start receiving funds as early as August. I think it should be a nice mix of them. I think that they should give them both Bitcoin and Bitcoin Cash, but that's just me because they were really the same thing back when Mt. Gox went down. Many people are panicking that the release of these funds will lead to a huge supply dump, which could significantly impact the Bitcoin price. So this is the real drama of what's going on outside of people who are directly do these funds or involved with Mt. Gox directly. So could this be a catalyst to spark the flippening? Yes, we had Ethereum Jesus. I had mentioned this tweeting this out. The Ethereum merge is timed perfectly with Mt. Gox users dumping 140,000 Bitcoin, about $3 billion, in late August 2022. The flippening is upon us, friends. We'll see. Or simply an excuse for Richard Hart to flex his visually unattractive and overpriced outfits. I mean, it seems to me that that's what he spends most of his money on, is just going to shop for the most expensive clothes that he can find and just trolling Twitter all day. I mean, that's Richard's life now. When the 142,000 Bitcoin are dumped from Mt. Gox in August, yeah, he gave us some nice pictures there, modeling. Okay, man. Okay. Although the price of a $3 billion dump sounds scary, we must keep a few factors in mind. Firstly, not all creditors will sell their Bitcoin. Some will continue holding. They have already seen multiple cycles, and the lower BTC prices just makes selling a less attractive proposition. Many of the creditors who desperately wanted to sell would have likely been bought out by bigger funds. We know that there were all sorts of funds and firms coming out trying to buy for pennies on the dollar this money, saying, hey, you're not willing to wait for the proceedings. You're not willing. Come on, man. You don't want to wait for the creditors, for you to be a creditor, and how long all these proceedings and rehabilitation are going to take. Just sell us your shares. We'll pay less for them, and then we'll get whatever is due. So many of the creditors who desperately wanted to sell would have likely been bought out by bigger funds early on, since they were impatient, or adjusted their crypto exposure accordingly. The biggest argument for creditors not selling is psychological. They were forced to hold an asset for many years and have seen massive returns. Bitcoin is so much more proven as an asset now than it was at the time of purchase. It's unlikely the majority chooses to sell. But again, this is just myopic, whatever you want to call it, because just because you held Bitcoin early on doesn't mean you still have a lot of money and that you're rich, YOLO, right? There are so many opportunities to lose money in crypto when it comes to bad trades, when it comes to scams, when it comes to exchanges going down. Although luckily the Mt. Gox people suffered that quite early on, so they probably wouldn't have wanted to repeat that, but mistakes do happen. Could have been lost funds during DeFi, could have been lost during Celsius. It could be that they're affected personally and they might have less funds, and then they might need to sell their Bitcoin. So I think it's something that you can't just apply to everyone and say it's unlikely the majority will do this or that. I think it's definitely going to be a balance here of buying and selling, and it's really hard to pinpoint exactly how much it's going to be. I don't know. These are again just Bitcoin OGs we're talking about as well. These might be some of the hardest hands that exist out there. So we're about to learn some sort of lesson, I suppose. But I don't think it'll be immediate either. Why would they all sell immediately and flood the exchanges to do it that day, right? They've been waiting this long. Doesn't make any sense to me. But purely for argument's sake, let's say all $3 billion hits the market. Would this cause a Bitcoin crash? Probably in the short term. Recently, LFG dumped 80,000 Bitcoin. Three Arrows Capital, there they are again, were forced to spot sell billions worth of assets, and miners have been continuously dumping huge amounts. These events account for billions of dollars worth of Bitcoin hitting the market. The result, a huge price hit. But the price impact of LFG plus Three Arrows Capital wasn't just the selling, it was the sentiment hit plus forced liquidations triggered. The worst is behind us. I don't know why he ends with the worst is behind us, because he's basically implying that we could again see forced liquidations happen, which could be the case, especially as we continue to hit lower and lower bounds. And the longer we get around these levels, especially when we have little bumps like we saw towards the end of last week, I think people become more confident. People forget that we might still be in a bear market really easily. It's like, I don't know. Crypto Twitter is extremely bipolar. You can feel the energy of people. Price go up, everybody just flooded with ideas and they're the smartest person in the world. Price going down by the same amount. Suddenly it's all pessimism and the same people use it for clout, I think. I think that's got to be at least some part of it. But yeah, as we begin to wrap up the show, I hope that was informative to you about Mt. Gox. I think it's important to revisit that history and make sure we're all up to speed. Some of you might not be super privy to what that was like, although we've covered it throughout the years here on the show. We are starting a new show. We do have some new subscribers, so welcome. Wanted to make sure that you know what's going on with that. Yeah, thank you, Carlo. That's very kind of you to say. It's really nice to be back with Elle. I did miss her so much. We were really, really great partners, and we usually got along. It was my fault. I'll take full blame for it for the most part here on what happened. So yeah, as we get to our quote of the day, I think it kind of lines in with what I'm going to show you there with that tweet. So our quote of the day is, "He who trades his identity for money will one day wind up with neither." Jim Goad. I think the truth has been shown to eventually catch up. In crypto, things happen on a faster timetable or time scale than in other areas or facets of life. Maybe because it's a new technology that has just gotten so many people involved so quickly. Exponential rises allows us to connect in a time financially in ways that have never been possible, in a time where we can finally connect internationally. It's just a crazy revolution, and it means that things happen quicker. We get access to charts that are impossible to see anywhere else because of that transparency of the blockchain, the charts that we can pull up and the data. It's a beautiful thing, truly. But I think it's catching up here with Alex Mashinsky, who's becoming so unpopular. He's basically gone into hiding himself. I haven't heard any sorts of tweets from him. Simon Dixon, who I thought was trying to be quite cordial with him in Celsius at first, has now turned aggressive now toward Alex because Alex had duped him into being on the board of directors there at Celsius right before Celsius had some major issues and wasn't completely forthcoming. And I think even BTC Kyle, someone who's one of these influencers, someone who I've known, who have met myself personally, used to watch my show and then started his show and grew up in a huge way. BTC Kyle has been someone who's been documenting Celsius and worth following if you want to follow the Celsius drama. He's been following it closely and being very optimistic, but even he's become less optimistic as it's come out that Alex Mashinsky himself has been maybe trading against his own customers to enrich himself with a sell token. People have been tracking his addresses and noticing his trades were less than forthcoming and really kind of unethical with how you would expect someone to operate, really, and how you never see operating that much outside of gray areas, but just making crypto look really bad. But here's what BTC Kyle had to say in reference to this video we're going to look at. "Then I expect all of my Bitcoin back, Mashinsky. These are the type of AMAs that give me full confidence in keeping my funds safe." Like, what the heck, man? I'm an investor in Celsius Network, also a depositor, and he also owns a stake in Bank to the Future. So check it out.
Right? That is the beauty of it. Now, you don't have to worry about it. You don't have to know all the security stuff, right? And
That's
Celsius
Alex
takes
Mashinsky,
full
by the way.
responsibility. If anything goes bad, we take full responsibility. That's part of why we raised at $750 million. And now we have over $2 billion on our balance sheet. Again, more than anybody else. Ask Nexo how much they have on their balance sheet, right? Ask BlockFi how much they have on their balance sheet, right? Ask all these people, right? So what's important for you is you need to know, okay, if something goes wrong, are these people going to stand behind, or they're going to say, sorry, I don't cover it, it's your loss, sorry, goodbye, take it or leave it, and so on. Why? Because they're cash, right? And they don't try to build a long-term business, right? They just try to grab fees from you. So all these things matter. And Celsius was tested every year. We were tested several times. Sometimes the market drops 50%. Is Celsius doing good? Yep, Celsius doing good. Something bad happens with the Celsius deployment. Is Celsius standing behind it? Yep, they're standing behind it. That's where companies are tested, right? Because when they blow up, or when they run away, or when they don't perform, or they don't deliver, it's too late for you. You cannot just go back on your decision, right? So those are all the things that Celsius shines, right? And that's why you should join us and celebrate with us every week of the year.
So there's this new financial product coming out. We're working.
The lies, we
provide
should be
the
doing
liquidity.
so much
Actually,
better, really. We should strive to be better than that. Just another example of another huckster in crypto who makes the space overall look bad. Man, what to say? So yeah, just looking at some of the comments. Thank you so much for the love. Thank you for showing up. Be mindful of love says, hey Omar, Richard Hart disgusts me. Yeah, he as far as a marketing billboard that he's become, is that what he's claiming to be according to Renee Pop? I think he just has nothing else to do. Like, you get to that point where we look at Jeff Bezos and some of the richest people. You look at Bill Gates, and it's interesting to look at just from a psychology aspect at when people have more than enough money, what is it they do with it? So you have the Vitalik Buterins of the world who look to current events and try to donate funds to those who need them. I think a great example of how to operate, right? And then you have Bill Gates buying up all the private farmland. He's the biggest private farmland owner in the United States, and so obviously some sort of profit incentive there. And then so investing, but Richard Hart, I think he's just so happy because he likely has the private key to Hex and could completely rug pull everyone, but he has more than enough money to continue to buy himself everything that he needs. There's only so much money that a person can spend even daily, right? And there's a certain point where if you're spending too much money, you draw too many eyebrows on too much money on certain things. So if you spend the money instead on things like clothes, it's not going to draw as much attention, and it gives you something to do with your money. It gets your dopamine going. Oh, pretty clothing. Oh, I have good taste. I think it's just his hobby. It's an expensive hobby, but there are other expensive hobbies, collecting planes. I don't know what to say. But I think it really is, in my opinion, still just quite a Ponzi scheme. Whether it's blown up or not doesn't make it not a Ponzi scheme. Hex. From what I can tell of it, as long as number go up and no rug pull, number can continue to go up as long as Richard Hart doesn't rug pull everyone. And it really makes it's not in his interest to do it. And that's why he's smarter than a lot of these dumber scammers who rug pull right away. Instead, if you never do the rug pull, you just withdraw what you need to, and right? I think early on he had access to all this ETH, so why would he even need to sell the Hex that could pump in the background? And as long as funds continue to come in, number continue to go up, and if he's at the center of it, controlling it, and there's no one else, then really he has the final say. It only makes interest for him to continue running this thing as long as he can. And again, he wipes his hands clean by saying he has no idea who it is. He didn't start it. He doesn't. I mean, there's no proof. That's fine. That's all cool. But it's I can go ahead and share my own thoughts on what seems like Occam's razor, and so. I think it's good, again, that people aren't getting rug pulled, and that as long as number go up, people feel the wealth effect in Hex themselves. They feel like, hey, that money's still there. And yeah, it very well could be, as long as not that many people continue to try to withdraw, including Richard Hart himself from his own ends. So hopefully it continues fine forever. Again, I'm not saying it's ever going to go down, but it is interesting that you see that over the long run with crypto, everything that is kind of shady does tend to go down, unless it's Tether. So that's all I can say. All we have are different points, and I don't know what's going to happen. I just never felt comfortable knowing that there would be such a high degree of centralization with where I parked my funds. At least with something like Celsius, you would assume there would be some sort of board, but even the board could be quite crooked, and so even so, you can't really trust it. Personally, I like having as many nodes as we have on Ethereum. Quite a degree of decentralization there with clients, and that's the kind of decentralization that got me interested in investing in the space overall. As I've always said, I came at it not from a trading aspect. I answered crypto from an investing aspect, and decentralization, that ethos to me was extremely important. So to me, it wasn't about getting a quick buck with Hex. But if you want to do it through Ripple, I've always said to folks, cool, go do your thing. And I guess congrats to those of you guys. I think there were 500 million XRP that were recently unlocked that were in escrow at a court that are going to be due to people who use XRPL. So follow that if you haven't been, and you might be due some XRP that were locked up. That was some news I didn't cover. But yeah, just saying, make your money, do your thing. I don't care, but it's just a blog that we're doing here for the most part, a news blog, and I can say how I feel, of course. And you're welcome to always do the same in the comments. Let me know what controversial topic or opinion you might have in reference to any of this that we've discussed today, because there was plenty that was quite controversial, and I look forward to reading that as I do read all my comments. Take care, everyone. I hope you enjoyed the show, and I hope I can catch you next time. Take care, much love, and stay cryptic from all of us here. Wallace is here somewhere. Kiwi, Winston, and L. Much love.